What's the reason for people to be holding physical gold and silver here in 2023? What are the main reasons you can think of?
Well, I think the main issue is we're been going through a high amount of inflation, whether it's in the U.S., in Europe, Turkey, other places much higher than others. But the reason is you want a place to protect yourself. And in today's environment, you look around at your options: real estate, bonds, stocks. The risks are much higher, and the way that the economy is now, maybe it's a little bit of growth to no growth, a stagflationary environment emerging. That's very beneficial to physical metals. It's the best environment for precious metals. So this is very unique, where precious metals may be one of the few or the only, maybe with commodities sectors out there that has the upside to it. And we're seeing the other sectors just slowly, fall. You get some of these rallies, but overall, you're not, crypto to stocks, other stuff there, it's not doing so well. So the precious metals, they're very important in this time where there's a lot of risks out there, and with the where we're at, the downside to upside, I think really favors precious metals at this point.
Right, and when it comes to differentiating between silver and gold, and we're still on the subject of bullion here, I think I want to talk about miners in a second, but when we're talking about the actual physical metal, is there one that people should be holding over the other to protect their wealth? Do they play different roles? What's your thoughts there?
Sure. Silver it's a higher risk metal in the sense that it moves to the upside and downside at a higher speed and rate than the gold does. It's a smaller market. Gold is more considered, the safe haven. It's money. It plays a different role. Where silver, it is also considered money, or has been, but it's an industrial metal, and it has that aspect to it. But it's such a small market, so when the investment interest does flow into gold, and if it starts flowing into silver, silver will react to it a lot more positively. I favor silver more than gold, just because there's a lot more of an upside. It has the industrial component to it. It has the green energy component to it as a green metal. And there's a structural supply deficit in the market. The gold market, it has a different role. It plays, it's there to protect yourself as a monetary insurance. So I think both are good for a portfolio. If you're looking for monetary financial insurance, you buy gold. If you want a little bit more of an upside and you're not too worried about an economic depression, maybe silver. So but again, if gold really does take off and investment comes in, it doesn't matter if industrial demand starts to really fall, because the investment side into silver will just overwhelm it. The inventory levels in the silver market are falling, so there's a lot more potential that the price gets squeezed.
Right, so let's switch over to equities here for a moment. The gold and silver miners, are you seeing any opportunity there, and how do you evaluate a gold or silver mining company to determine if it's worth investing in? Sure,
the miners are really cheap. They've had a nice rally over the last few months, so sure, there's a potential here we get a correction from these. Some of them have doubled from their lows. But you look back, some of them have fallen 60, 70% from their highs. It takes a lot more to regain their former highs that we saw just from a few years ago. Each miner is different. You got to look at different, risks involved. On the risk side, you want to look at where they're mining. There's different geopolitical risks. You can get some taxation issues, more unfriendly governments in certain parts. And it is more of an issue as the price of gold goes higher. So you may get more risk coming in there. But for the moment, a lot of the miners at these gold prices they're doing quite well. There are some companies like Equinox Gold. They were some of their costs just surged to the roof. They were pretty much a marginal miner. Now as the price of gold goes up, they become very leveraged to the price. So you can do quite well, but again, if the gold price goes down, you can be a bit of a problem. The companies can fall from that. The upside with like Equinox, they're bringing on a really low cost mine here in about a year, so that's going to change aspects. So every company has its different dynamics. You have to look at your risk profile, because the smaller miners have higher risks. You want maybe to diversify with a company which has multi-mines in different countries. You always want to look at their cash positions and their balance sheets and look at it from that perspective. But overall, it's not much of a difficult decision here for me to buy any miner. Their risks to downside are quite limited. I don't think gold and silver are going to get crushed here again. So at this point, I see any pullbacks in the sector as buying opportunities. The miners are going to make the move here first. They're going to get the initial flow of capital coming in, and then the juniors exploration stocks will start to make their move.